Yo guys, what is up? Welcome back to another video in the AM Trades YouTube channel, and in this video I'm just going to be very authentic and show you where I'm at in my trading journey. A couple of new things I've started to implement in the last couple of weeks, and also the results that I achieved since I've made a video about 3 weeks ago. So let's just dive straight into it. So first things first, the results that I've achieved since mid-November till the start of December. So on this week, the 17th to the 23rd of November, about 2R. So we can just say that's 2%. So it's a winning, overall, my combination of strategies helped me be profitable that week. And overall, the win rate was 52%. So not too great, not too bad. It was a winning week is a winning week. You take it. And then the next week, 3R, so a bit better, 58% win rate, so pretty good. And the week after, 60% win rate, 3R again. And then that's the last 3 weeks. And so what I've done recently is I've cut down the amount of assets that I'm going to be trading. So currently, you can see on the screen, these are the assets that I've determined that I want to keep on my trading list. So these are all there right here. And also, I've decided to add confluences and consider these confluences when I'm making my trading decisions. So you can see here, H4 Swing Strategy Playbook. And so this playbook is developed from 3 months of forward testing the strategy in real time and just noticing things in regard to price action. So number one is, this means if a trade has these confluences, there is a higher chance that it turns out in my favor. So number one is that when you have the breaker structure, so we talked about this previously, when you have market making higher highs and higher lows, you have a higher high, that structure is broken. If that structure is broken and you target liquidity or a fair value gap, there's a higher percentage chance that that trade will work out, right? Because that fair value gap represents an inefficiency. There's buyers and sellers at that level that haven't been tapped into yet. So a quick example is on USDX right here. You see like fair value gap is this gap left between these candles here. That's an inefficiency. So if you were to trade, say this is a breaker structure to me. Let's just say, for example's sake, this is a breaker structure. You see this part here, this candle closed below this part there. I can see that, okay, they were coming into a multiple fair value gaps. Actually, there's another one here too. That's a high probability trade because there's untapped liquidity there. So this is how I would play that. I think I did take this trade as well. I would play it like this because I know price is surging for that liquidity. So that's the first one. The second one is if the breaker structure is also in line with the daily, weekly, and monthly. So I know in my last video I said I don't really consider multi-time frame analysis, so that's changed. I have started to consider it. And what this means is that if you have one breaker structure marked out, say for instance, here, this is the breaker structure level on the 4 hour. It's a downtrend. You break this structure here below, then that's a breaker structure for a short. If that breaker structure is also a daily breaker structure, or a daily breaker structure is around, let's say it's around here, right? And it breaks through both structures on 2 different time frames, that's higher confluence for me for a trade. Another one is if you have a breaker structure, price leaves a fair value gap, and then it keeps rejecting off that gap. It means there's that inefficiency, but the market thinks that inefficiency is not worth tapping into at the moment because the fair value of price is actually higher or lower, whatever direction the breaker structure is in. So as an example, here, so you see here, for example, you had this, this breaker structure. So you had this here, and this big 4 hour candle broke that structure. It left this fair value gap, but price rejected two times, right, off that fair value gap. That gives me greater confluence that price wants to go up because it's not filling that inefficiency, which means the market doesn't deem that to be inefficient. It just means price is actually needs to go further because that's the fair value of the asset that you're trading. Next one is avoid trades where PA does not make sense to you. So sometimes I'm looking at a chart, multi-time frame analysis, and it kind of doesn't make sense to me. There's lots of market structure breaks. The multi-time frame analysis is all over the place. The daily is saying one thing, the 4 hour saying another thing, the weekly is saying another thing. There's too many levels. Avoid. Zoom out and consider the larger trend. So, um, like for example, if we're looking at this on a larger basis, you can see that price is actually in an uptrend. Right? I know it's hard to see because here it looks like an established downtrend, but if I get my path tool, you can see that price is actually in an uptrend. See, it's a long-term uptrend. If you look at this on a higher time frame, you'll see that price is actually in an uptrend. So consider that larger trend, and then just mark out like the larger trend levels and be careful. So you can take trades between the levels. So for example, I can see that there's that larger time frame uptrend, but within that larger time frame uptrend, I have been taking shorts on USDX between here because opportunities have presented themselves. But it's important to just consider that larger trend and where the levels are. Um, the smaller market structure break and then breaker structure could just be a formation of a higher low. Yep, that's right. So if there's the larger uptrend is bullish, and I can see that prices has made a market structure break on the 4 hour chart, and then there's a breaker structure to go short. Be careful because price could just be making a higher low in that established uptrend. So I'll still might take the trade, but I'm just wary of the levels at this point. And then the last one is avoid the fourth breaker structure and beyond. So what I've noticed is that the second and the third breaker structure are actually the most reliable. So if you go to the silver chart, you can see here that let's just say that was the market structure break level on the 4 hour chart for the downtrend. Price broke that level, came back. That's the first breaker structure, this one here. This is the second breaker structure. So this one here and then this one here, these two breaker structures are the most reliable. That's what I've seen in my forward testing. The fourth and the fifth, you could still catch it because this is a larger trend. But what I've noticed is the second and the third breaker structures are the most reliable. And then, yeah, you can see I have different levels marked out. So now I consider, what the swing low, obviously on the 4 hour chart, what the swing low is, what the swing high is, where's the next breaker structure. I look at the weekly level, so what the weekly close, weekly open and weekly close the previous week. Monthly trend, so I have monthly swing high here. Weekly level, so this is a weekly close. And then daily swing low, so in that established uptrend. This has to hold for the larger uptrend to be true, basically. But it doesn't mean I can't take shorts. But if we're over here and there's a short opportunity, I'm going to be a bit mindful because price could just tap off that daily low and then just revert back up if it's in a true longer term uptrend. So yeah, and I'm very grateful that I've spent the time learning price action and forward testing because I wouldn't have learned all of this if I didn't do it. And I think what I'm coming to is that I'm just being more selective with my trade. Trying to put all the probabilities in my favor. And one of the points on that list was avoiding trades where the price action doesn't make sense to me. And implementing that the last 2 weeks has particularly helped quite a bit. So that's that. The next thing is, so with regard to my stock strategy, so my stock strategy is a bit. Oh, another thing is I've abandoned the Euro 1 hour strategy, and yeah, I've abandoned the Euro 1 hour strategy, and I'm not trading NAS 100. Oh no, yes, I am. I'm trading NAS 100 here, but I think with NAS 100, I'm just gonna do it not box system, but just breaker structures. Anyways, let's move to the stocks strategy, which is a bit more interesting. Is I'm still trading consolidation, so boxes, and in line with the 9 and 21 moving average on the 4 hour chart. But what I've noticed is with this strategy, in a single week, you can have two, three, four great setups, take them, and you win them all. And then for weeks on end, it will just be quiet. The market will be dud. And this is what I experienced because a couple of weeks ago, I had wins on AMD. Yeah, Cisco was one of the wins. So this was a couple of weeks ago here. AMD was another one of the wins. Where was it? I think it was this one here. There was also another two of them. I can't remember exactly where they were. Oh, POTR. Yes, POTR. You see here, I had a win on that one couple. So 30th of October, about a month ago. And then Avgo was the last one, I believe. Yes, here, Avgo. So those four trades gave me four winners in a week. And then I've only traded like twice since that week. So I think BAC. No, this was last week, but the trade didn't fill, which was annoying. I think it was AXP actually. Yeah, AXP was the week after, see, the 8th of November, and that worked out in my favor. But the point being is, you just have to stay patient because the market can just go dud, and then all of a sudden setups appear. And so last week, I finally, my patience paid because I took some trades on, so it was Apple, Cat, and Tesla. You see Apple broke out of this 4-hour box. I took the trade here, and yeah, I exited here. Same with Cat. Cat broke out of this consolidation, took the trade here, so a bit late, and then got out here, and then Tesla as well. Tesla as well, took the trade here, got out here. So, with this strategy, I'm just going to be patient now, and let set up. And also, like the mistakes I've made in the past with stocks is I'll have a week like this, and then I'll feel so good about winning that I'll just want to keep trading next week, set up as many as possible. Whereas now I feel like, okay, I've won. Let's back off from stocks. Let's monitor the market, see what's going on. Especially this week, back off because there's FOMC. And just apply your H4 system because you know that week on week you gain about 1, 2, 3, sometimes 4, 5 are. So yeah, that's where I'm up to. So, with the 4-hour strategy, a bit more refinement, cut some assets from the list, considering higher time frame analysis and trends as well. And then for US stocks, just being patient, waiting for setups to appear. And yeah, that's it. That's the update video. Just wondering, is there anything else that I've not really. Well, one thing is I'm trading with at $100 risk now. So a couple of weeks ago I was trading at $100, and I realized it was affecting my psychology a bit. So I scaled it back to 50, then went to $70, and now I feel I feel comfortable again to go back to $100 worth of risk. So that's what I'm going to be doing. I'm going to be forward testing $100 risk now, and we'll see how we go. But that's the update. I'll see you guys in the next one.